I will continue to trade this strategy until everyone in my community is able to get this total understanding and the simplified way of picking money in the market on a daily basis. And of course, this is not ruled out of, remember, we said this strategy is called Felix PARSS. So Felix PARSS is called price actions, resistance support strategy. Price action, resistance support strategy. Now, so if we're looking at the market, for instance, this is gold. If you look at the position I've taken out today, that has done about $34. All right, $30 right now. So assuming I'm looking for $20 for the day, that means I was done. Now, this is why I taught and I continue to teach this strategy for people to be able to learn. Now, two basic, all right, two basic, what's it called? Indicators are added to it, which is called the 50 moving average, and at the same time, the MACD, to simplify the entry positions for any trader who actually follow simple instruction. Now, so going to the market is this. So this is gold, and it can happen to any instrument, so it doesn't matter what instrument is all about. Now, so let's quickly look at it. First step, we've told you that, of course, there's a need for you to understand price action. So no matter what you want to use, no matter what strategy you want to use, price action is essential for you to understand. And I've said three things about price action. I teach this detail in a course. So if you want to know more detail, and this is just like a kind of fundamental and preliminary for you to be able to find an entry and exit. Now, sometimes you may lose a trade, or sometimes you may actually win the trade. But another thing is that there's a need for you to understand risk management. And so these are different things, an embodiment of you to succeed in the trade. So now quickly look at the market. You see that this signal was sent, even when I sent it as a small lot size, because it needed to break certain level and before you can actually find an entry. So what entry I took now is just like a kind of snapper entry that of course had printed maybe about $20-30, depending on how much you're trading with and what position you open. Okay, and now that's one of the things you will need to understand. So quickly looking at the market, one thing we said first you must do is that you come into the market, and probably because you're, and I'm still in the school of thought that, so if you're a day trader or a scalper, you want to go 4 hours. But for me, I still always love to have to start from the daily candle. Okay. Now they may say it's not necessary, or say there's so many news today, and those are the news you're seeing like this. Okay. So now let's go. What I do first of all is to identify the previous day high and the previous day low. All right. So if that's the case, it's taken care of. So this is what I did. Look at the candle of yesterday. Yesterday candle. So yesterday candle, the previous day low, and previous day this was the low and previous day high. So look at the candle. So this is the high and then the low. Now, one of the lovely thing about the market, however, is that I wouldn't say because I can't really see what really happened with this. Is this either the market actually first came down, but nevertheless, whichever way it goes, no problem. Now, or in the, when I said there's something I tell which you should pick and everybody should understand. All right. I said something about trading. I said trading, there are 3 or 4 fundamental things that are very, very important in your trading. First, price action. So take note of that. First, price action. Second, volume. And third, liquidity concept. And 4, discipline. These 4 things are very important. And I said in price action, 1 is candles, or you can do candlesticks. 2 is market structure. Market structure. Okay, so let's do it this way. I can help you. Then take a screenshot of this thing and work on them. Okay, candlestick. So 2 is market structure. And the three, it's called support and resistance. Now, there are others. These three components of price action is very important for you. So volume is just about momentum. Momentum, right? So volume is about momentum. You need to understand the correlation of the, you need to understand the correlations about the momentum and of course, how it pushes the market price, okay? So very, very important. And if you cannot get attention to this, it's going to be very problematic. Now, liquidity concepts, basic thing. There are many things about liquidity concepts, learning about other blogs and all of that, stuff like that. Now, but the most important thing you need to know about liquidity concepts, the number one thing I'll tell you about liquidity concept is called imbalance. Imbalance. Okay, so pay attention to this. I'm not going to teach this detail just to give you a high effect. Discipline. So everything about your trading is about discipline. So your discipline has to do with your what? Psychology. Okay? It has to do with your psychology. Now, please, I'm not teaching this as a concept. I'm teaching all of this as strategy. Psychology, right? Risk management. Risk management, right? Money management. Money management. Sometimes we can teach this, concurrently. Two of them almost the same. So these things are very important. So you look at this price action, all right? So, and so the strategy I teach on this, based on this, is called what? PARSS. PARSS trading, PARSS trading strategy. All right? So now other things you definitely need to learn more, or you want to really become a professional, you need to learn about trading plan, okay, detailed technical analysis, but this is not going to do that. So now basic thing with this, so you can take a picture of this thing, it's very, very important for you, okay? Take a picture of this thing, is very, very important for you, just to understand that if I must do well in my trading career, I need to build up this. So now let's go. Support and resistance strategy. We have identified the previous day high, previous day low, and previous day high. Now, if we go forward, I've marked it right. So sometimes you don't even need to come to this, but I always come to this to mark it appropriately, to get the candle practically speaking. Now, if that's the case, the one thing you want to learn again, most time, but you may not need to go too much that detail so that you will not be confused at the point. Okay, so now let's go. So I'm going to go to a lower time frame. So since we have gotten it on this daily now, sometime you can go to 4 hours and see this is called like top-down analysis, right? So going to 4 hours now, it's going to give me other points. So other points I want to link at in my 4 hours. Now this market is actually an uptrend. You get it? Yeah, it's actually an uptrend. This is a massive pullback, or creating a swing. So it's actually an uptrend. Yeah. So this is an uptrend. Okay. So this is an uptrend. So you have a low here. You have a high. Okay. So you have a low. You have a high. You have a low. You have a high. You have a low. You have a high. Now you have a low. Okay. So either this come to, this was a low, right? Now, but this has not created a high eventually. And then this came to sweep this liquidity. Okay. So whichever way, then we're having that. Now, when I get all of this, so remember I said this was the previous day high, previous day low. So if I go to 1 hour, now I mark all of this point so that when my market get there, I will know what to do per time. Okay. And then you can always take profits at those regions. Okay. So the challenge you probably will have sometime. All right. So let's go here. The challenge you have here sometimes is that you can be under fear, and that's where discipline comes to play. Now you have to make up your mind, and then discipline, right? Discipline, we have said, that has to do with risk management, psychology, and all of that. If you don't do that, now if you're not disciplined, you will not be able to do proper risk management. So your level of discipline is what will determine your proper risk management, and it's very very crucial. Now, so if you look at its market, this is 1 hour. Now, you want to mark some other important point, which should not be here, but that was the previous high, so you're still okay. And then there's some other point here which is supposed to be liquidity, but why you may not have so much problem because this guy had actually swept all of this liquidity. All right. So that's about liquidity concept. These are swing low, and then it's expected that okay, the market orders are placed there either to no sell or buy and put stop losses. So all of them have been wiped off. And so you should be more optimistic or your bias that the market should be going up because there are other things for it to grab, probably. Okay. So now marking all of this, so that's where you see I mark all of this. So if I go back to 15 minutes, remember, you as a day trader or a scalper, you are going to be working more with lower time frame. But your higher time frame, you have to check the market movement and then what direction. So if you look at it now, it's okay, the market should be going up, right? So with that, but if you look at it, there are points to point that the market is going to be rejecting at or need to break neatly. And this is the point. Look at the point here, and this is another point here, right? So the moment we're able to break all of these points, then you can have a smooth running, right? But nevertheless, you need to understand and recognize that those points can actually cause the market to break down again and, of course, take direction. Now, sometimes as a scalper, if you have entered the trade early or you're falling off, now getting to this point where it's struggling, you will have been in money. And so it depends on what you want from the market. Now, so if I have marked all of this point and I said you can support yourself with two indicators. One is called the MACD, which is this, and the second is called the 50 moving average. So I'm going to take off this one that is here, and then I will teach it, right, which is called alligator. I use time to teach alligator separately in a different video. So if you want to go and watch it. Now for alligator right now, this is 15 minutes. Now for my entry on alligator, it's not actually right for me to have entered. So we always say indicator actually lag, but if you know price action, you will definitely have entered. But if you're on 5 minute time frame for scalping, you will have entered even with the alligator. And how do I mean by that? Because right now, alligator who said you are looking for an entry when you have a bullish candle. So if you're looking for a buy, when you have a bullish candle close above the jaw of the alligator. And if I spread it out abroad now, you're going to see that this is the jaw of the alligator, this blue line. Now, so we have a bullish candle that closes above it. This is the first one, but that's not the proper one because immediately after that, you have a massive, breakdown and all of that. So it's supposed to be a very powerful engulfing candle. Now, if you look at it now, this is the real engulfing candle, right? That closed above the jaw, which is this. So that means your entry was just very, very recent. You can see that it's because we understand price action. That's why we're able to enter before now. But the market is still very, very risky because you have a high here that need to be taken out, but the market is struggling below it, and that's not a good sign. You have another high here, and the market, of course, have not gotten there. And then you have the last high here. So if you're able to wipe off all of this, right, you create a high here, that break a very nice structure. And then breaking above this. So now you can see that I'm now purely talking on price action. Okay. So now, but what we say is that for your trading, okay, for your trading, you're practically looking at, so I said, adding 50 moving average. Let's go here. I'm going to add 50 moving average. And there's something, of course, you need to understand once you have set up your trade. Psychologically speaking, your level of discipline is that what exactly do I want to achieve in this trade? Am I scalping, or am I trading, or I'm swinging? So, and if I want to scalp, immediately I enter, find some positions, give you $20, $30, depending on what your equity you are taking the trade or you're taking the profit. And so if that's what I'm looking for instance, the position I enter at a point was $34, I'll close them. But that's not what I'm looking for. So I'm looking to ride market to an extent to make more than that. Okay. But in the process too, I could lose the money because the trade may not be so strong enough because this is not yet confirmed, bullish, because we have a low here that has to do with now market structure. Okay, we have a low here, all right, and we will have a high here. Okay, the only advantage here is this. Okay, now, but overall performance of this trade, because you cannot consider this as a swing, this is two. Now, because a swing is to contain at least three candle in that direction. Now, this ordinarily was the high that created this low. Okay, this was the high. Look at it here that created this low. Now, the market now you expect that to have this market when it got up here. That is to say, it's a pullback, all right, after breaking structure here, it moves and then pull back. So this is a pullback. Now this pullback, before you can consider this market is now returned bullish, it has to take out this high. And so somebody is learning. So you always want to look at which high produces this low and which low produces this high. Then the market now creates this high and it's pending. Then market move down and create a new high, but never broken this. So tentatively, you are not reversed. But the thing that now happened now was this. The market now creates a low and never got down to this point. So this new low makes it you have a potential turning. Now, but for it, that turning to now be getting stronger gradually is that this pullback here that have created a low here, this guy should break above this high. Now, when it break above this high, that become a change of character. So it's not changing. Now, when he now take out this high, then that become a market structure shift. So because we're going to have break of structure. Now, I'm not going too much detail. I'm just trying to let you know in the price action. But now that you have found an entry, it is sniper entry and a risky one. Now, so what do I want to do? I've entered, the market is running, and then the moment I grab this, you expect the market to break this structure, probably almost touching here, and then pull back on top of this, or relax back to this point, and then that's when it's going to take a very fantastic move. All right. So now, if you look at your MACD, now there is a crossover, which if you are following it, you want to like take a position. But the crossover momentum is not much. That is the volume. So this is your momentum indicator. It's not much. And that's why you see that the market has not been able to break above this high, let alone to take out this high. Now we said the other indicator you probably will add. So let's remove this alligator was what? 50 moving average. So you can go to indicator. Then if you like, if you use 50 and 200, you probably want to use a called 10 in 1. Okay. You probably want to use what? 10 in 1 different moving average. So let's take it now. 10 in 1 different moving average. All right, good. So now let's go. We're going to do settings on it. So let's click on settings. This is free. You're not paying to use all of these things I'm mentioning. And that's why I'm taking my time to explain it. So we're going to go to the settings so that to actually edit it. Now, so you probably want to enable this and then change this one to EMA. And then put this one as 50. So put this one as 50. And perhaps normal, and of course change this one to green sometime, or blue, whichever color you prefer. So you go to style and then make this one thicker, probably maybe a third, just make it thicker. And of course leave it at red the way it is. You want to scroll down and uncheck this label on price, scale, and value. So just uncheck them. All right, so you're okay. Good. Then you close it. So you can see now, even on your 50 moving average, this market is not yet right. All right. So by real market structure, this market is not yet ripe. Can you see now? But we only took an entry. That's a very big risk, right? Now, remember what I told you, even before your 50 moving average, we have seen that this is a high that was created from this low. But this high that was created now produced this low. Now, by market structure, this low is called LL. Let me quickly show you. Let's do this. So this is called LL, LL, okay? And why is it called LL? It was L before, but it's now called LL. And then this is high. Now, this was lower high because of where the market was coming from. This was coming from up, and then it will create a lower low and lower high. So there's a lower high. So here is a lower high because of where it was coming from, why this was lower low. Now, this now is another high that ordinarily need to have broken the structure. Okay, this high should have rallied down and finished this guy. That become a break of structure. So this low, new low had been created. That means this is low here. Now this high that's created here by structure is lower to this. Now being lower to this. Now the market, rather than breaking this, is top over somewhere here. That gives you a signal that the market is about to change direction. Now, if the market is about to change direction at this point, then you now need to see a good move that the market actually change direction and break this one. Can you see now? That's why you see I mark this point. Even though I've entered the market, now it should break this one. Now, so the moment it break this one, when it break this one, that'll become change of character, because here you now have something here. That here, this one become another form of what you may not understand, but I have to make you to understand. And what exactly is that? So I'm taking my time because I want everybody in our community. My target is having minimum of 500 people making average of $20 to $200 on a daily basis. You hear me right? Yes, average of $20 to $200 on a daily basis. So now let's take this here. Okay. So here, you see this page now? So here become not a lower low, but become a higher low, HL, okay? This become what? HL, not a lower low, because this is lower than this. However, this is low, but now higher than this. That makes sense? So I'm taking my time to now incorporate, price actions explanations as regards to market structure. All of this candle, all of this diagram, so let's call it diagram. I want to go as layman as possible. All of this diagram, they are called candlesticks. And candlesticks is what represent the bidding of the interest of a buyer and a seller. Now, it's not necessarily the color, but what determine or what define a candle to be bullish or bearish is where it opens from and where it closes to. Okay, so it's not the color. So I can change the color you are seeing, for instance. So most times people look at the color of the candle and say when the candle is green, yeah, so that means the market is bullish. So don't get it twisted that way. I can change the color of the candle to a different thing altogether, right? And change the color of the candle to a different thing altogether, and then that gives you a different thing. And most time people don't get it. Right. So I can change the color of the candle to a different thing entirely, and then you get confused, and eventually, like, oh, so I can border it to be black. All right. So can you see now the candle is different from the color you saw? Okay. Even though this now it become blue and something a different color entirely, right? So now this what I've done is very simple. Okay. So this I've done, you can see now, okay, good and fine. We've seen the market has broken this point. It has broken this guy, right? That means we have what we call change of character. Okay, I'm not teaching you what do we call it? I'm not teaching you smart money concept, just so but you know those things are interwoven with liquidity concept. Okay. So now we have change of character. So the market is changing character. Now, the moment we break this, we now have break of structure, POS. So here we now have break of structure. Let's look at it. Okay, sorry. Okay, you now have break of structure. BOS, break of structure. Okay, so when it get out of this point, you now have what? Break of structure. So at that point, you are taking the market seriously. Now, you see that the market now has crossed your 50 moving average, but you are not yet through. But however, we have the first body close of this. So you want to have continuation. And that's why if you look at the trade I took now on this, let's see how much. It's about $60 right now. Yeah, it's about $60 because I just took small position 0.05, 0.05 in two places. It's about $60 right now, 50 something dollars, 60 something dollars. Now, when it breaks this structure here, when it breaks this structure here, and that means we are now advancing, but yet now it's still fragile. Okay, so we're now advancing now. But if you entertain unnecessary fear that time, you probably will run out and all of that. So when we break this structure, then that's when, if you look at my take profit here, so at that point you're now going to look at maybe take profit one, probably somewhere here. Let me just take this. So let's say this is your take profit one. Now, when the market advanced that level or somewhere here, let's even look at it. So when you take profit one, you want to adjust your stop loss. You can see what was $60 now is back to $43 as it were. Remember, I told you that we actually need to break this guy nicely and all of that. Now, if you go back to your MACD is sluggishly moving because there's no momentum, right? So we're supposed to have something similar to this, and that will have moved very well. And if you look at it again, so your moving average, your trend is still typically a downtrend because you are below 200 moving average. Okay, you are below 200 moving average and all of that. So you're supposed to close this place neatly and all of that. So you are still struggling within the range, but you are having kind of change of character. So which means here, let's look at it here. to change of character. Okay. So this is change of character. So then you need to now break this to break of structure. Now something happened. After a break of structure, the market now come back to grab liquidity wherever there's what we call an imbalance. So an imbalance, the SMC trader call it FEG. Now, I don't trade FEG, I trade an imbalance because sometimes trading an FEG is that the market return just tap into it and get out. But imbalance, I want the market to return back and fill it completely. All right. Now, if you check this market now, why it's still very, very fragile and why people will be struggling and all of that. So, where can I find any imbalance here that was left behind in this market? To find that here. So, sorry, this thing is getting more advanced, so I need to stop it any moment from now, okay? Because that's not what I'm supposed to be teaching you. It just support and resistance strategy we're learning. Okay. So that means you are saying chances are there that this market's still going to come down to this point, right? To come and tap into this uh, fair value gap, or what we refer to as an imbalance. Then we have an imbalance that was already mitigated here, here to this point, and this actually mitigated, if you can look at it here. So this has been mitigated by this. Then you have another small one here that has not been mitigated. So a change of character. So we're supposed to have this market continue to move up, but you're having this to retest the 50 moving average. So let's watch what happened at the close of this candle. I think we're still 5 minutes. Then, well, this kind of candle is not a good one for you because this now have a kind of a pressure, a sell pressure for the market continue. So this is what we're doing. So practically speaking, that entry was like a sniper entry and risky one. And if you go to the Signal forum, I put it small lot size. But if I was looking for just a small scalping at that point, I'm already 60 something dollars before, later 60, 50 something dollars, and then I will have closed here. But now that's the advantage of entering one or two, three positions instead of one. Then one or two can close when it just gives, because from here to here was a massive profit if you were following the market. Because how will I have done? I probably, when I saw the market breaking this low and all of that, and I saw it create a higher low, perhaps by even sweeping the liquidity here. Sorry, mitigating the imbalance here, and then look at an engulfing candle. This will have been my entry. And if I do that, that is to say from here to here, so from that point to this point, even to this point, that's already 80 pips. So I can stop there and take 80 pips and another one here, right? Another one here. Yeah, so another one there, here, up there. That's another 140 pips. Okay. So, but nevertheless, we're watching. So by the time we break the structure, over here, by the time we break the structure over here, you will see that you're already crossing 200 moving average. So now you can see why people just solely depend on indicator. Oh, if when the market cross 50 moving average, I will buy and all of that. You will be buying late. That's the truth. But the difference again is this: what do you use 50 moving average or 200 moving to identify the trend? Are we already in uptrend so that when the market pull back, you are looking for a buy instead of selling or thinking that's now selling. When the market pull back, you're looking for a buy. All right. So that's how we use all of this to complement and get an influence, a confluence to find an entry. So you can see this strategy is amazing and powerful if you pay attention, right? To pay attention to different instruments. It doesn't work for only gold, so it works for everything. So you just need to know what you are doing per time. We'll look at Euro USD. Yeah, I think we have a challenge in network or something. So why I emphasize on teaching this for everyone to have serious understanding is that it's the simplest and more very effective way of finding a trade and be profitable in the market. Okay, so you can see, uh, the same thing now on Euro USD. So I actually saw this pullback on Euro USD, and I say, okay, that means it wants to continue buying. And then you can see now from that pullback that I saw, I think on my MT5 with alligator, then I will have bought into it and all of that. Now, over time, I'm going to show you another style of this pullback in 5 minutes, how to trade pullback in 5 minutes. Still part of PARSS strategy. For this segment, for you to mark finding an entry, maybe at the reversal point or the normal way of the market and all of that. Then at a pullback, how to actually address entering into it at a pullback and all of that. All right. So thank you. Take your time, stay with it, and learn and adapt to this strategy. It's going to help you. My name again is Medai Jima, for some the team leader of Plan B Express. If you have not signed up on a broker Capital Extend, now the link is on the comment section. Try and get registered as fast as possible, and let's roll together. Thank you. Do have a nice time, and bye bye.